Good afternoon, good evening. Welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for December 28, 2008. AccendoTraders.com, effective video, technical analysis, trade plans delivered daily. Each time we come together, we want to prepare ourselves for the next trading session, so that's why we have our trade plan. We want to check our open positions. We want to find out what's coming down as far as market moving news and see what's going on as far as what the newsletters and blogs are saying. We want to check their sectors to see if there's any movement going on. We always want to check our 3 major indexes, scan for new trades, and set alerts for the new trade. But most importantly, we want to make sure by having our trade plan, we're focused so that we now have time to spend with our families. So the week that was, we had a market end down for the week. The majority of this down move happened on Monday and Tuesday. We did have a little small uptick coming on Wednesday and Friday. But overall, we had light volume with this holiday shortened week. And even though it was the holiday, the market was not in the spirit of giving. We had more economic bad news. MasterCard said that from November 1st to December 24th, the holiday shopping declined 4% year over year. As far as this negative economic data, we had existing home sales fall 8%. Initial claims surged to 586,000. Durable orders fell in November. Personal income and spending fell in November. GDP was negative in November. So it certainly was more negative news on our consumer. Amazon, however, came out and said it was the best holiday season they ever had. So maybe some people with the cold weather decided to stay inside and shop online. Great. As the internet becomes more and more mainstream. On Friday, we had the Fed accept GMAX application to become a bank with the sole purpose of that to get access to the TARP money. Who wants a bailout? Bailout for you, bailout for me, bailout for we. With the bailouts, the builders, first it was commercial real estate are asking to be bailed out. Home builders are asking to be out. And now retail says, me too, me too. So everybody, a bailout for you, a bailout for me, bailout for we. More details on the Ponzi scheme with Madoff, and it was a tragic situation we had this week where a person committed suicide, a victim of the scheme. So certainly the effects and the full story is certainly more to come out. Again, we have another holiday shortened week coming up here this week with even less news this week. The question is, will the legendary Santa Claus rally ever happen? It certainly didn't happen before the traditional Christmas season. And we talked about last week whether or not people sell at the end of the year and buy at the beginning of next year for tax purposes. I was reading that it says from now until the first 2 days of January is when the quote-unquote this Santa Claus rally is supposed to be. And we did have a couple of days. This is all talk. In this environment, nothing is the same. Whatever's been general, statistical, stereotypes, all that does not play in the environment that we're in. So we'll have to see. We don't have anything going on tomorrow. So we'll once again have the true sentiment of the traders. And again, probably more light volume. So again, as we said last week, trade lightly if you trade at all. Before we look at the 3 major indexes, I want to make sure we take the time to remind everybody in 2009, we're really going to be using Twitter to get our alerts as a part of our 30-day challenge that we have. So I want to make sure that you guys check out twitter.com/AccendoTraders to sign up to get our free alerts. Again, with regards to sectors, with the nothing really changing, and you can see this consolidation pattern that we've been in for a couple months here. There's only a couple that really caught my eye, and not even that much. First and foremost is metals. We talked about metals last week. They broke up, and then they fell back down. So I want to see if metals can break above 500 here. You guys know that U.S. Steel and CLF and Nucor have really been the stocks we've been looking at in the metals series. So I want to see, can metals get back above this 50 moving average? In addition, we've talked on and off about airlines, and as oil continues to drop, airlines, trucking, These are the two sectors that are going to benefit the most from that in our transportation sector. And airlines keeps just chugging along as oil comes down. Now, as I shrink this for you and you look at this long term, you can see we continue to come into resistance. So we'll see if we can break back above $95. But airlines is something to watch if you're into that. Not one of my favorite sectors though. The one that really caught my eye here is gold. And you can see gold is continuing to make higher lows and higher high, higher high, higher high, higher high here. And as we shrink this one, you'll see that in actuality, we've also kind of broken this long-term downtrend line. Let me shrink it one more time here. And you can see this long-term downtrend line is really beginning to break here. So I like the fact that we could be breaking out, and I'm really liking the gold sector. And you guys know the AEM, ABX, GLD, those are some of the great stocks in the gold sector. With regard to the market, the first thing I want you to go ahead and take a look at is look at the volume. Now, this was 2 Fridays ago, and you can see how it dropped off. So again, no volume. You can't have high volatility with no volume, with big moves. So if you're going to trade, you want to day trade. You want to catch a move. You know, this trend trading is not really going to get there. I'm going to show you a couple of sectors, but for the most part, we're consolidating, and more importantly, the 50 moving average is hard resistance. We're still waiting to break above the 50 moving average to make our higher high. At this point, we're just consolidating and just in a little lull here before we can make a move. So let me show you the sector that caught my eye. Okay, and now we're going to begin our education portion of our video, and we are on Chapter 5. Woohoo! We reached Chapter 5 in the book Trading in the Zone by Mark Douglas. Chapter 5 is the dynamics of perception. And this is something he's talked about before that obviously we're going to go into more detail on, and that is the dynamics of perception. And more importantly, that the market is just information. It's just a stream of data. And you as a trader take your background experience and your market knowledge and put meaning to this stream of data, to this ticks up and down. And it is that experience that you've had that formulates that meaning. And if that meaning equals pain, then that pain clouds your judgment and it clouds your vision to see the opportunities in front of you. How many times has it been that after the day's over that you say, oh, look at that rising 3 pattern. Oh, look at that head and shoulders pattern. Why didn't you see that when it was going on? For me, it was mastering how do I get out? What is my signals to get out of the trade? And, why didn't I pull the trigger here? Why did I pull the trigger too soon? Again, it's your background experience. It's your ability to be in the zone and see that information and to see the opportunity. What separates new and inexperienced traders and losing traders from the professionals and the successful traders is their ability to not see the market as a threat, their ability to stay in the zone, stay in the flow of the market, stay in the flow of the stream. Again, we're not Simmons fighting upstream. We're just going to ride the flow of opportunities and execute our trades based upon our trade plans. They're able to do things that mystify everybody else because everybody else is really either doesn't have a trade plan, hasn't educated herself, or are trading off emotions. Trading is not hard. It isn't. But controlling yourself is what's hard. Controlling your emotions. Right, staying calm in that stream is what's hard. Trading is not hard. And that's why, again, we don't say market knowledge is not what makes you successful, because everybody knows that. What makes you successful is having rules, having a trade plan to recognize those opportunities, and then being able to stay calm in those opportunities and execute those trades. The very best of the best traders recognize the fact that they can compensate by either scaling out of bad trades, having a trade plan to cut their losses, and more importantly, be prepared for the next opportunity. You're not going to win every time, but you need to be able to put that trade behind you and move on to the next opportunity. So this is, we're putting our video out today. This is the YouTube version. We're putting it out today so that people can get at it. The full version of our podcast will be available tomorrow. There's a link to get it. Subscribe podcast.html. If you want to become a paid member that gets our stock picks, remember our weekly videos on the weekends does have our stock picks, but our daily video, which identifies our entries and exits and what we're looking at, that's where you become a paid member. accendotraders.com/video.html. There's our blog. And remember, the 2009, January, we're going to be really using Twitter. So there's twitter.com/accendotraders. Sign up for our Twitter account so you can follow some of our alerts there. Thanks, guys. Happy holidays. And I will see you